Sometimes it feels like the stock market speaks a totally different language, right? You hear about bulls and bears and all these crazy charts. Well, in this explainer, we're going to act as your translator. We're going to demystify the whole thing so you can finally understand what it's really all about.
Okay, so let's just tackle the biggest question right out of the gate, the one everyone's thinking. Is the stock market just some exclusive club for the super rich? A place where you need a fancy finance degree just to walk in the door?
And the answer, really, is a big, simple no. It's not about how much money to start with, it's about how much you're willing to learn. The gates are open to absolutely anyone who wants to step through.
So with that myth busted, here's how we're going to break this all down. We'll start by talking about what a stock actually is. Then we'll dive into the secret of why prices go up and down. After that, we'll look at the tools investors use to make decisions. And we'll wrap up with the million-dollar question. Is this a smart investment, or is it just one giant gamble?
All right, section 1. Let's really get into why this isn't some exclusive country club. What is the stock market for in the first place? Well, you can think of the stock market as kind of like the engine room of the whole economy. It's the place where great companies go to find the capital, the fuel they need to grow and innovate. And when you invest, you're not just watching from the sidelines. No, you actually become a partner, a part owner, and you get to share in their success.
And that brings us right to section 2. We keep saying you're investing in companies, but what's the actual thing you're buying? Well, that thing is called a stock.
So what is it? A stock is just a small slice of ownership in a company. Seriously, that's it. When you buy even one share of a company like Apple, you literally own a tiny, tiny piece of every single iPhone they make, every MacBook, their entire business. You are, officially, a part owner.
If there's one thing you take away from this section, let it be this simple idea. Stock means ownership. It's not just some random number blinking on a screen. It represents a real stake in a real-world business.
Okay, so how does this ownership actually make you money? Well, there are basically 3 main ways. The first one is the one everybody knows. You buy it low and you hope to sell it high. Simple enough. The second way is through dividends. Think of these as a little thank you check the company sends you from its profits just for being an owner. And the third way is through investment funds. This is like buying a pre-made basket of a whole bunch of different stocks, which is a fantastic way to get started without having to pick individual winners yourself.
Now, this brings us to the real heart of the mystery, right? Section 3. If you own a piece of a company, what makes its price zig and zag like crazy every single day? At its core, it all comes down to a really simple concept: supply and demand. It's like a giant seesaw. When more people want to buy a stock than sell it, demand is high, and whoosh, the price goes up. But when panic sets in and everybody wants to sell at the same time, supply floods the market and the price comes right back down.
So what's pushing that seesaw back and forth? Well, it's a whole mix of things. You've got the hard facts, like how much profit the company's making or big news about the global economy. But then you have the wild card, and that's human emotion. Things like fear and greed are incredibly powerful. They can send a stock's price flying to the moon or crashing to the ground, even if the company's business hasn't really changed at all.
So, with prices getting yanked around by both logic and emotion, how on earth does anyone make a smart decision? Well, that's where we get to section 4, the analyst's toolbox. There are basically 2 main ways to approach this. The first is called fundamental analysis. Think of this like being a detective. You're digging deep into the company itself, its profits, its debt, its management, to figure out what it's really worth. The other approach is technical analysis. This is more like being a weather forecaster. You're not so concerned with why it's raining, you're just studying the patterns on the price charts to try and predict where the price is headed next.
Which, of course, brings us to our final and maybe most important section. After everything we've talked about, is buying stocks a legitimate investment strategy, or is it just like taking a trip to the biggest casino in the world?
And here's the absolute key. The line between investing and gambling, it isn't drawn by the market, it's drawn by you. Acting on a whim on some hot tip you heard with no plan, yeah, that's gambling. But making a calculated decision with a clear strategy for how to manage your risk, that's investing. One of the best tools for managing that risk is something called a stop loss. Just think of it as your own personal safety net. Before you even buy the stock, you decide on the absolute maximum amount you're willing to lose. If the price falls to that point, your stock sells automatically. It's a simple rule that takes emotion out of the equation and can stop a small loss from turning into a huge disaster. Because at the end of the day, success here isn't about finding some secret formula or a magic stock pick. It's all about developing the right mindset. That means thinking in terms of years, not days. It means understanding that there will be ups and downs. And most importantly, it means getting rid of that get-rich-quick fantasy for good. So no, the stock market isn't a casino you visit for one night, and it's definitely not a finish line you just cross. It really is a journey. And while it takes patience and a willingness to learn, it's still one of the most powerful ways ever created for anyone to build long-term wealth. The only real question left is, are you ready to take that first step?